26 years of CNBC-TV18.
Fairly subdued picture across the Asia Pacific as well. No major directional cues.
Refunds worth over 600 crore have been processed.
The number of companies listed has also grown nearly 5 times in this period.
2047, 100 years after independence, I think get ready for us index in the 7 figures.
I really don't think people should worry about succession planning. I think we have an excellent management team.
2,100 stocks which are in the red, for about 700 stocks which are in the green.
Point of view, I think the stock will jump from the point of view that we have building a model which is more stable and more predictable.
As we speak, we are rolling out the first wave of new products which will be reaching dealerships very soon.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Last 1.5 hours to go and markets have sunk to the day's low and trading with steep losses now. 1% gone on the benchmark indices. Look at the mid-cap index. Mid-cap index down 2%, small-cap index down 2.5%, and the advanced decline ratio 1:6. 423 stocks advancing to about 2,500 stocks declining. I think since the year, the problem has been that the broader markets, the portfolios, have been struggling and not performing. And look at the way it's pretty much ending. I know here we've been celebrating at CNBC-TV18 26 glorious years, but today the market at least doesn't feel so glorious.
Well, that's right, Rima. In fact, the manner of the fall is a little bit worrying in today's trading session because we started off more or less stable, had a mild cut, and on an every hour basis, actually, we have been making a lower low. So I think that's a bit of a worry as well. The breadth of the market, portfolios are getting absolutely hammered. But the hope is that maybe, in fact, the excesses are getting cleared out. And I think one point, Rima, two of the leading sectors, whether it was aviation or EMS, both those two have come for profit taking. So that's a bit of a worrying aspect because Interglobe Aviation has lost its way. And the EMS pack, where everyone has been talking about the long growth, the runway that is there, that sector has come in for some profit taking. So that's a bit of an issue. And remember, this fall is coming on a growth-oriented RBI verdict as well as on a favorable GDP print as well. So I think that's a bit of an issue.
So the rate sensitives which rallied on Friday are getting undone now. So the Nifty Realty Index has a cut of about 3.5%. The Nifty Auto Index also underperforming the benchmark indices with a fall of 1.5%. The Nifty Bank has a cut of about 678 points. On Thursday and Friday, markets rallied, especially on Friday. But on Thursday, Friday, together we added about 200 points. But today, we've lost a lot more than that. On the Nifty, we're down close to about 270 points.
All right, a good time to welcome in, a market expert, market veteran as well, Manish Chokani, Director, Inam Holdings, who joins us on the show. Hi, Mr. Chokani. Good afternoon and good to see you in. It's always a pleasure to talk to you, sir. You've been a friend, to the channel, and it's been great interacting with you over the last many, many years. And obviously, CNBC-TV18 even before I came on board. Tell us how do you feel today, first, about our 26 years.
Well, thanks for having me, Nigel, and congratulations on 26 years. I'm looking at you, looking young and handsome, and I can only think back to once upon a time, I was like that too. So thanks for reminding me of how one looked when one was much younger. But I would like to say, though, that, there are few institutions in India which have stood the test of time and kept the trust of every citizen going. Our army being, of course, right on top over there. And there's so many institutions, the Election Commission. But in that list, I would like to add the capital markets, which are always on and always functioning and always helping people to get wealthier as time goes by. And like the famous old saying said, that you can, if you want to feed a man, give him a fish, but you want to feed him for a lifetime, then you teach him how to fish. Right. And in that context, the work that CNBC and others of your profession have been doing is just simply outstanding to actually bring the capital markets and wealth creation to every citizen of India and help them participate in this incredible wealth creation journey. So thank you for that.
All right, that's heartening to hear, Mr. Chokani, and thank you for those words as well. You know, before I joined CNBC TV18, I obviously was following you, and thanks to CNBC TV18, you know, the brand, that I get to interact with you more often as well. That said, we are celebrating our 26 years, but the market's a little bit subdued today. What are you making of the current market setup? You know, it's a little bit worrying because we had a pretty good GDP print. The nominal number obviously was still in high single digits, which is a bit of a worry. But the RBI has pivoted. Growth focus is what they're talking about. For the time being, the market is ignoring any kind of good news. How are you feeling about the Indian markets?
Nigel, it's not a sort of T20 game in a sense. And I sometimes laugh and joke with my colleagues that maybe I belong to the sort of earlier generation which played test matches and where victory was decided over 5 days. And not as, you have in T20, if you lose 5 overs of the T20, you are out of the game. So that's not the case with, when you're investing. You have to take a longer term view of businesses that you're owning and people that you're backing. And occasionally, if you get ahead of yourself, like we did, I think in September 24, when the valuations were completely off the charts, we spent a year kind of consolidating and still hoping for this growth to come back. But when you see a single-digit GDP print and RBI has to pivot towards growth, it's telling you that there's a challenge. And while all of us participants remain optimistic and hopeful about our earnings recovery, it's also a fact that if inflation remains, this 2-3%, and nominal growth remains 2-3%, then even getting to a 15% type headline earning growth is not kind of in the bag. And a market's still trading, north of 20. And again, the challenge that I know you'll ask me is, at what point do foreign investors come back and so on and so forth? The reality is, look, everyone is here chasing growth and a higher rate of return. So people happily will buy, Zomato or a lot of even the QSR type companies at 100 times forward on 27 earnings. But they don't want to buy a 5P multiple, PSU Bank, for example. So it's always growth in context of valuation that one has to think about. And our market needs to digest that a bit, that we are ahead of ourselves in many, many pockets of the market.
Manish, hi, afternoon, this is Reema here. So we'll come to the pockets where you see some overvaluation still, because it's been a long period of consolidation, 14 months for our markets to get to their all-time high levels. But before that, your own verdict and view of the global markets. Do you think this AI tech momentum continues into 2026? And if that is the case, will India continue to underperform emerging markets, say Korea, Taiwan, China, which is seen as AI plays? What is your top-down view for the global markets?
So thanks for that, Reema. That I think the AI reality is a bit like what we experienced, in fact, when your channel started, that the 99 and 2000 period where it was complete euphoria on the emergence of the internet. And it was the telecom companies which were building the backbone. And you had all these global crossings and people like that who are, going hammer and tongs at building out the infrastructure. At a certain point, the market just pivoted and said, the capex doesn't justify the returns that are going to come out of this space. And in fact, I may be off by a few months, but I don't think the NASDAQ came back to its 2001 peak until 2013. So it's not a 3, 4, 5 month phenomena. It often takes decades for excesses of valuation to get corrected. Even our most famous company, Infosys, which peaked out in 2001, I don't think took out that previous peak for the next decade. And there are a number of places where, in the US also, where these 5 or 6 companies have taken out the bulk of valuation for that market. They've in fact been underperforming emerging markets as well as precious metals. And it's showing some sort of a regime change, that there is inflationary expectation in the developed Western world, and that inflation therefore will show up in terms of higher prices for commodities, and increasingly to things like gold and silver and uranium and copper and so on and so forth. Plus emerging markets, excluding India, have already started outperforming last year, and that trend is going to continue. So India needs to correct a bit for its excesses, I guess, on valuation, and also discover our mojo and what's our next big sort of profit opportunity, which even you guys are grappling with. Because in the absence of creating our own tech and our own brands and our own way to create the next burst of external businesses, we're sort of trapped in a sort of low growth, only a market share internal grabbing kind of exercise. So we will probably tread water for a while.
But just a simple answer. Do you think we are in an AI bubble? The setup is similar to 1999, 2000, because what followed was the dot-com bust. Are we there yet or not?
Yeah, so, like I said, it's similar to that period where internet companies, of course, continued to do well. It was the valuations which suffered. And again, it seems to me very strange that someone would pay, a $5 trillion valuation for what is essentially, essentially it's a capital goods stock, and don't hold me to that exact term. That if you're buying chips which will effectively become degraded in 3, 4, 5 years, and that capex cycle can't continue at this pace, plus others like Google and all have come into the the game as well, and the craziness which is going on with the OpenAI valuations. So valuations is really bubble-like, and typically what happens is demand suddenly everyone wakes up at the same time and says we're spending too much. So what looks like justified on current earnings not being excessive, people often point out that there are 25, 30 multiple stocks, but these are predicated on that level of earnings coming through. And typically what happens is that these earnings then don't come through, and stocks then typically correct, as much as 50, 60%. From where it takes a very long period to then, come back to the previous high. So I do think while AI is here and it's a transformational thing for all of us, and we'll all be living in that reality in the next 3, 4, 5 years, very much like the way the internet transformed our lives, it transformed our businesses as well. The same thing will hold true for AI, but not necessarily for stock prices of a lot of these AI companies. And again, to take that format forward, it were people who were users of the internet, for example, financial companies like ours, or healthcare companies, or retail companies, which will be big beneficiaries of this AI boom. And the way to play AI is therefore eventually to go to the businesses that benefit from that, serving consumers, rather than necessarily those who are, the providers of capital. Again, think of it in the Indian context that maybe Jio made a lot of investments to build out the broadband network for India, and it kept India going during COVID. But the people who benefited from it was not Jio in that sense, in terms of, the way they made the ROI. But it gave rise to people like, Zerodha and Grow, or indeed Zomato and the others. So you need to be thinking in terms of second derivative, that where is this, ball going towards? Let me pause on that.
All right, Mr. Chokani, if you had to give us a couple of themes, you're obviously highlighting that there has to be some bit of a corrective phase that could continue in the near term because of the valuations, because growth is not really catching up, and maybe earnings, as you mentioned the last time around, you cautioned us, maybe the street is a little bit too optimistic. But you have to name a couple of themes that still look well-placed, maybe post the recent correction in a lot of those sectors, whether it's EMS, renewables, defense, all through the last 12, 18 months or so, saw a lot of interest. And they've fallen off the cliff, actually, a lot of stocks out there. But in terms of themes that you still like, what would they be?
So, Nigel, I buy things bottom up, and it's not really thematic. When themes become popular, actually, they tend to go to an excess. And like Dr. Mark Faber used to very famously say, at the beginning of a cycle, the entrepreneur has the vision and the investor has the money. And by the end of the cycle, the entrepreneur has taken away the money and the investor is left with the vision. And a lot of that is happening now, as you see, including companies from overseas selling down their stakes, Indian promoters selling down their stakes, private equity selling down their stakes. And really, Indian retail has been lapping it up by way of the massive inflows that one has been having. And even professional fund managers have been struggling to justify what they are buying at the valuations they are, and taking cover in the fact that they have no choice but to deploy capital. So the unloved segments, when you go and invest over there, for example, I could mention, PSU banks as possibly one example. The finance minister herself has said that her attention is going to be a lot more on privatization now. We also know that this whole trade shifting away from tech to hard assets is a decadal trade which will take place. You've seen the performance last year of gold, silver. Already it's happened with uranium, already zooming on copper and the others. So that's a trade which is taking place as well. And they're starting with, well, not exactly depressed and low valuation, but relative to where the rest of the market is, they may look very, very cheap. And I've spoken in the past about you win when you get asymmetrical bets. And if you think in terms of, is this a 5p stock 5 years out? So if you can't look out till say 2030, and you can't predict earnings of the company, you have no business buying it. But if it looks like it could be a 5p stock by 2030 based on what price you're paying today, the odds are that you'll reach a 15 to 25 multiple by that time, which means you make 3 to 5 times your money, which is a reasonable rate of return to make in a 5-year time span. So there are enough things to do. I don't mean to say the entire market is overpriced, but when you're buying stocks at 50 and 100 Ps, your execution has to go completely right, and your macro has to stay completely right for you to make money. And being a value guy, it's been harder for us, to hold on to stocks which we bought early, but we can't hold on till they go to 100. So we are rotating more towards what I call the value side of the market.
Manish, great chatting with you. Thank you very much for joining in. But the point is well taken that many stocks still today are priced to perfection in India. We will slip into a break on that note. On the other side, we'll talk market technicals. Mitesh Thakkar joins in. Dipan Mehta of Elixir Equities will also put the spotlight on individual stocks.
"26 years of CNBC-TV18. "26 years of CNBC-TV18.
Okay, well, it's a tough looking screen and 256 odd points lower. We are starting closing bell, I think, about 5-6 minutes early, but it's not a good looking screen at all. I think we are below the 20-day moving average for the Nifty, and I think for the Nifty Bank as well. While I think the 20-day perhaps would not be broken, but we should be very, very close to it. Okay. It is broken. 59,140 is where we are at, and I think the 20-day, as of yesterday's close at least, is above it. So that daily average, 59,030 was the 20-day moving average. Okay, I think we're still
today's
above.
Low as well.
At today's low, we've
we have breached it and we bounced back.
Yeah. Just about breaching it by 1 point or so, and then from almost exactly that coming up today. Market breadth is terrible. Just look at it. 5:1 declines to advances. 2,600 stocks are lower, and you've got about 500 stocks which are higher at this point. Mitesh is with us with a quick technical view, and it's looking pretty bad. Mitesh, good afternoon. I don't know, when we spoke in the morning, it was a more tear-over kind of screen, at least from a GIFT Nifty point of view, and it just completely collapsed. What's your sense, Mitesh?
True, Prashant. I think, it was a quiet screen in the morning, but again, I think I maintain that we'll do this range of about 25,850 to about 26,300, and we were kind of coming off from the highs, because Friday I think we got a high of around 26,200, and therefore getting towards the lower end of the range wasn't a problem. I think if we get a closing below 25,850, I think that will be a first kind of big warning sign for me, and then you might look at further declines, possibly to even as low as 25,450 levels, and then maybe lower. So I think holding on 25,850, 800 zones for me would be very important, and a break below that, would be slightly negative and could start a short-term correction, which could then even evolve into something big. Given the fact we've been quite overbought after the rally from 24,600 to about 25 to about 26,300, and now we might retrace a significant part. So in that sense, the market structure is not very comfortable, and therefore 25,850, 800 to me remains a very decisive level in determining short-term trend. On the stock side, I have two sell calls right now. PNB is a sell with a stop at 120 for targets of 110, and Geo Financial is a sell with a stop at 301.1 and targets of 285.
Okay, PNB and Geo Financial and 25,800, 25,850 is the pivotal level for Mitesh in terms of specifics. Mitesh, if I can request you to just stay with us, but I'll come back to you, maybe just a name or two from a broader market perspective and how things are collapsing. But we got some news as well with regards to industry data from general insurance, from life insurance companies. General insurance data came out earlier. Life insurance numbers came out just, I think, about an hour and a half back. Yash is here with what stands out. Yash, over to you.
Well, Prashant, it's blockbuster numbers coming from two companies specifically. One is SBI Life Insurance and the second one is Axis Max Life or Max Financial Services. And it almost is like these two companies have gotten into a habit of delivering very, very strong numbers. Importantly, the strong numbers in the month of November comes on a very strong base as well. So that's an added advantage as far as the quality of numbers is concerned. Speaking about Axis Max Life, the new business premium has grown at 24%, total AP growing at 25%, retail AP growing at 23%. That is one. The second one is SBI Life, even better. New business premium growing at 35%, total AP growing at 30%, retail AP growing by about 33%. Speaking about other companies, to start with HDFC Life, it's a weak growth, but it has come on a strong base. New business premium growing by just about 2%, total AP by 16%, retail AP growing by 20%. ICICI Prudential Life, weak growth on a strong base. New business premium down 41%, total AP down 52%, the retail AP, that has seen a growth of about 13%. LIC, it's a strong growth, but the base was also quite favorable to the company. New business premium growing by 35%, total AP down by about 49%, retail AP up by about 23%.
Thank you very much for that. On a side note, the rupee too has depreciated today. When we opened, I think it was 90.07, and now as we speak, the rate is 90.17. I think the all-time low, record low was 90.3?
90.4.
90.4, okay. But there has been a gradual depreciation today, perhaps to do with the kind of weakness that we've seen in the markets, and maybe there will be strong outflows from the equity markets. Dipan Mehta is now joining in. Dipan, afternoon. How are you making sense of the fall? It's quite brutal when you look at the small cap index in particular. That's down over 2.5%, inching towards a 3% decline. The advanced decline ratio is just getting worse now. Two stocks advancing for 13. I mean, if you had to put reasons to the fall today, what would they be?
Oh, I think they're difficult to put reasons to this thing, but it could be because a lot of money is flowing into the IPO market. I think we are seeing big IPOs getting fantastic collections as well. So a lot of, I would say, attention has got diverted over there. And also this delay as far as the trade deal with US, they're also kind of unnerving a few traders because bets have been placed on the fact that in a few weeks or so, we would have a very favorable trade deal, but that's not happening, that's getting delayed. So that's also affecting the trader sentiment and the rupee depreciation. I mean, it's all fine to say that it will not affect our economy is strong and everything, but it is definitely very negative for foreign investors. So that also seems to be affecting the sentiment over here. But all of these things seem to be transient because the underlying growth momentum seems pretty much stable. All the indicators are pretty strong. And I'm just waiting for the next year when we'll see December quarter numbers, which I think will surprise on the upside.
All right. Hi, Dipan. Good afternoon. Good to see you. And Dipan, at times, adversities bring the best buying opportunity. Interglobe is one such stock that's corrected 20% from the top. And the problem looks quite large at hand. But given the kind of leadership, given that they're a lean and mean machine, that's what they've shaped up to be in the last few years, would you look to buy into it after a 20% correction? Or do you think they're still far away from resolution? The employee cost is going to go up, the operational cost as well is going to go up, and you have the rupee weakness, that's could be another headwind. Would you look to buy this dip?
Good afternoon, Nigel. First, a disclosure, we already have shares of Indigo with ourselves in our model portfolio and with our clients. So we are feeling the pain of the stock price correcting, not to mention the pain of a lot of travelers also. It can be quite harrowing for flights to get cancelled, especially at this time when it's full wedding season. So yes, I think it's the company's in a bit of a problem situation. But I mean, I know that it is not right to say so. But these such companies with the kind of market share which they have and the kind of expansion and additional seat capacity coming into play, if you have a 2-3 year type of a view, then this definitely is a buying opportunity. They will solve all of these problems. Okay, some costs may go up, but the big cost for the company, of course, is the lease rentals which they pay and the aviation fuel. And that's pretty much stable, except that the rupee depreciation will cause a bit more of a problem in the December quarter as well. So if you are prepared to look for Indigo beyond December and March quarter and more into the next financial year, then I think it's available at reasonable valuations. It's amongst the very, very few nifty companies which can still grow at kind of double-digit mid-teens type of growth rates. There are very few left in the nifty just now. So from that point of view, I think if you're benchmarking versus the nifty, then definitely I would like to be overweight Indigo. And otherwise also, I think if investors in their portfolio do not have adequate exposure to travel and tourism, which is in a secular growth mode, then this is a great stock, actually the leader in that sector. So at times like this, when there is panic and where there is so much of, I would say, angst around the stock, it may be a good buying opportunity, but you should be prepared for a high degree of volatility.
Deepan, hi, afternoon. The bigger question, and we don't know the answer, there's no way to know yet, is that a lot of criticism essentially exactly for, the kind of leadership that Indigo enjoys, right? That they have about 0.75% share. So what happens when something like this happens with a player with 0.75% share? It's India halts. So, I don't know if this is the correct analogy, but look at what happened with NSE and BSE, right? NSE was the monopoly. BSE is now slowly over the last 3 years built a 25% market share. And I remember over the last 3 years, there are many who believed that, the regulator, the government, they want more than one player because these are, integral to healthy functioning of that sector of the economy. A large exchange is, and so is airline, right? I mean, so are airlines as a business. I don't know in what shape, form can the government encourage more competition, but I'm not even sure, but I'm just thinking out aloud. For now, though, let's go across to Madiha, who's here with what she's picking up. She's been in touch with stakeholders across the board. Madiha, I don't know if you have an answer to the question I was wondering aloud, but first take us through what you're picking up. What's the latest?
No, right, Prashant. That's the question on everyone's mind. The monopoly that Indigo has in Indian aviation, and why don't we see more players? I mean, aviation is so vulnerable to external factors. Startup airlines are struggling to begin because no lessor is ready to, lease an aircraft to them. So how can the government step in here, to support these startup airlines and encourage competition? But as far as Indigo is concerned, the impact is huge because Indigo is, as we were talking about, India's largest airline, controlling 65% market share. It operates 2,200 flights every day. And since December 2, Indigo has cancelled nearly 6,000 flights, hitting close to 9 lakh passengers. That's the impact, many of whom were left stranded across major airports. Some missed their job interviews, some missed their own weddings, and many don't have money to book flights on other airlines due to the exorbitant rates that we saw after this crisis started. It is a crisis that India has never seen before. Indigo CEO and the COO have been given time till 6 p.m. today, not much time left, by the DGCA to give a complete, comprehensive response on their failure to ensure reliable operations. The airline is slowly pulling itself out of a crisis that has shaken the entire aviation ecosystem. It claimed to have operated 1,650 flights yesterday, which was quite an improvement, and plans to operate over 1,800 flights today. That's what Indigo just said. The Indigo board has set up a crisis management group to bring operations back to normal. And as per the Aviation Ministry's latest data, Indigo has processed refunds worth 827 crores. That's the latest figure between the 21st December to 21st November to 7th December, and has returned 4,500 luggage bags to passengers out of the 9,000 that it claims it is yet to deliver. But that's very little considering the scale of impact this has had. Indigo has been the only profitable airline in India and has been expanding rapidly. It would have never anticipated this kind of crisis. The stock is down nearly 15% since the crisis began, and the airline has lost over 37,000 crores in market cap cap since the 27th of November. So operations may be improving, but accountability questions and the regulatory consequences are far from over.
And we'll see what the CEO and the management basically tells the government. 6 p.m. deadline. So about less than 4 hours to go. I mean, it's a report. They'll have to reply, but the pain, of course, being felt by consumers across the country. I just want to shift gears and talk about one more name, Fino Bank. You know, they got the license from the RBI a long time in the making, and you know, so much speculation around it. License comes, stock actually, I don't think sees green at all. I mean, it starts lower and now down 13%. It's gone the other way. It's almost like, you know, some license has been cancelled, not given. Deepan, what do you make of it?
I'm quite perplexed when I saw the stock price correction. And actually, it's quite an interesting bank, and the business model, the scale of operation, the nature of operation is very different from a lot of other banks. And actually, their correspondence or the network actually acts like a branch. I'm very surprised at this kind of a correction. I thought the quarterly numbers also were pretty much okay. So maybe there's something more that meets the eye over here, something that we are missing, some news or something. But I don't think there's anything negative that I have heard. But nonetheless, even I'm as surprised as you are. But it's not a bad bank per se. And I think becoming a full sort of small finance bank will certainly help enhance its image and also improve its profitability going forward. So I'm a bit surprised at this correction. So far, no negative news heard, but who knows?
You know, Deepan, that you saw that eternal block in the morning, right? There was an unidentified institutional seller, which is, I mean, it was selling from one of the institutions. I don't know. I mean, will we see a possible? It's basically the problem is everybody is on the sell side, right? Retail right now is on the sell side. Institutional investors are on the sell side. Sponsors are selling. Promoters are selling. Of course, foreign investors are selling. Only thing which is who not selling is mutual funds, and that retail money, which is, I guess, the 20,000 crores which goes in every month. Days like today make you wonder how long will that. You know, is that going to be like a steady thing, or people's patience is going to be tested?
Shall we just hit a new high, whatever, 5-10 trading sessions ago? Just a minor correction. I think this is part and parcel of the market. It's no big cause for concern.
Deepan, I'm not even talking about the Nifty. Nifty to jo karta hai kar. You know, on the day, I'll tell you, I looked at NSE 500, right? Nifty went back to September 2024 level. Only 170 out of 500 companies were even in the green. You know, and 170 companies which were in the green, I counted very generously. About 20-30 of them were up 1% over the same period. You know, I should have knocked them out. So it's the broader market which is kind of very painful.
No, Prashant, you're right. I think there is a very, I would say, severe correction in investors' portfolios. So that certainly is a cause for concern. But I think investors will learn the hard way that this is not a market which goes one way up, and you got to take knocks on your portfolio as well. But I'm not that concerned. I think people who have still got cash in their portfolios or in their savings should put it to work. Of course, you should not be cancelling your SIPs or anything like that. And have a faith that and confidence that the overall economy, the corporate earnings certainly are looking up, and we are seeing a very good correction of the P multiples. Even the market is going up. Everybody's just talking about how high the P multiples are and how ridiculously high they are and how they are unjustified. Now we are reaching a stage where a lot of good quality businesses are available at reasonable valuations, and this is a great time for a long-term investor to put money to work. I know some may not have the cash. You don't have the cash. You remain invested. Reshuffle your portfolio into stocks, which you think can perform better. So you can do some relative performance, strategy over here as well, and try and improve the quality of your portfolio. But I'm not at all concerned about the way the market is correcting. This is part and parcel. It happens like that only. Who knows, 5-6 months down the line, once the Nifty has gone to another new high, and you will see pickup coming into small mid-cap stock. And one last thought I want to leave you with is that right now you may see a lot of FI selling. That is true. But the minute they feel the rupee is stabilized and the valuations are reasonable in small mid-cap, I am certain that a lot of their buying will go back into small mid-cap stocks. as a lot of FIs are very, very active in the IPO market, as can be seen. So once you feel that good quality businesses in small mid-cap space are available for the FI investors, I think they'll be there to support those prices and buy at those levels. So I'm not that pessimistic at all just now.
Okay, all right, Deepan, stay with us. We're going to just take a quick break here and continue this conversation. 25,920, so 270 points lower, but 5 down for every 1 stock higher. So that's advanced decline for you. Stay tuned, coming back.
Welcome back. Markets continue to struggle at the low point of the day as we speak. But let's focus on a couple of names. Biocon will make Biocon Biologics a 100% subsidiary. The board has also approved the swap ratio for the transaction and cleared a proposal to raise up to around 4,500 crores via the QIP route. Ekta joins us to help us out with details of this deal and also the key takeaways from the management. Ekta?
Well, yes, Biocon is in focus. They will be making Biocon Biologics into a 100% subsidiary. So a couple of things which they said and Kiran Mazumdar-Shaw told us over the interview as well as over the analyst call is that the reason for this is that the Biocon stock was being undervalued post the Viatris biosimilar buyout which took place. And this will essentially also get rid of the holding company discount as well. Now, they will have to assess whether Serum Mylan, the timeline in terms of the investments, when quizzed about whether or not they would be strategic partners going forward, Kiran Mazumdar-Shaw did say that they are really not essential to the longer-term story of Biocon Biologics. They are welcomed investors, but not really integral in terms of the way that Biocon Biologics is shaping up. And hence the question on board succession, where she said that it has been very well managed as of now. Now, talking about the promoter holding, remember that it is falling below 50%. It's falling to 44% if you count the QIP. And however, Kiran Mazumdar-Shaw did say that she's comfortable with that holding of around 44%. They will be raising additional funds via QIP. They've already raised it in June. They are confident about raising further funds via QIP. The $1 billion debt level is comfortable. They are confident about the EBITDA growing, and that should take care of the debt and the comfort level on the debt. Now, they will currently retain their holding in Syngene as well. Remember, they have been pairing off stakes since 2022, but as of now, they will keep the stake stable in Syngene.
Okay, all right. Thanks a lot for that, Ekta. Well, let's get a quick view from Deepan. Deepan, you want to weigh in on this one?
Yeah, Nigel, I think it's a very good development because, Biocon is a company worth watching. First, the disclosure, we and our clients are invested in it. It's got a very, I would say, a very different type of a business model. Its manufacturing processes definitely give it a competitive edge. And I was always concerned about this holding company discount because Biocon Biologics is where the real action is. And now that they decide to merge it, I think it's very, very positive for minority shareholders of Biocon. And I think looking at this company in very positive light, maybe looking at very good numbers coming through as well, I think 2-3 quarters down the line, and a lot of opportunities opening up for in the GLP, that is the weight loss, diabetes space for Biocon as well. So, and this acquisition also, I think, has got delayed. The benefits have got delayed, but will come through pretty much. So very positive on this company. And within the pharma space, I would rate Biocon among the top 3 or 4 companies from an investor's perspective to remain invested in.
Okay, all right. Thanks a lot, Deepan, for joining in, giving us that view. We noted your pure positive view on Biocon as we speak. But I think the market's a little bit jittery, and it's a good time to get you a check on the F&O basket. And I think the Nifty holding on to this 25,900 mark is extremely crucial. And the odds are that maybe, in fact, we do defend this mark. So 25,850, 25,900, extremely important. The reason I say that is the PCR has come down to the lower part of the range. We're currently at around 0.63 odd. That normally signals a near-term relief. So that's point number one, the technicals in favor of a bounce. The other factor is that the Nifty, though, has broken the 20 DMA. So you'll want that 25,900 mark to get defended. And maybe by the end of today, we closer to around the 20 DMA, which is going to be extremely important. And one of the key parameters will be if the Nifty Bank can defend the 20 DMA. Remember, it went down to around that 59,000 30-odd mark, and from there it's seen a bit of a bounce. So that 59,000 mark is very, very important for the Nifty Bank. Why has the PCR come down? Because call writing has become all too easy. 26,000 call, 26,100 call. Aggressive writing is what you're seeing. The PCR has crashed. The premium has crashed on both those two strikes, telling you that the bears believe that they have got it covered at higher levels, which explains why the PCR has come down. So I think the 25,900 mark needs to hold out. If that does hold out, then maybe, in fact, the cases of a bounce are rather high. Moving to stocks in focus, Indigo Aviation, the total open risk built up is more than 30%. Fresh shots in the system out there. Hitachi Energy, one of those darlings that went from 3,000 to 23,000. Well, that's seen a lot of fresh build up. Fresh shots being sit on that one as well. And Keynes, that it appears the stock is under pressure because there's a combination. Cash-paid selling, and there's some unwinding of long positions as well. So explains why that stock is under some pressure today at an extremely, extremely crucial juncture at this point of time.
Okay, we'll take a quick commercial break here. Nigel, thanks very much for those levels. We've been, of course, focusing on the market as we should be doing, but it's also our 26th birthday. And what we've done is invited a very special guest, a 26-year-old, to talk about markets. Samir Arora is going to be joining us on the other side in just a quick bit. Coming right back.
"26 years of CNBC TV18."
Welcome back. Market 25,950, and it is painful looking screen. Broader markets sinking, 5 down for every 1 up. Well, as promised, we on our 26th birthday have invited a 26-year-old, young, vivacious, inimitable Samir Arora. Samir, great to have you with us here, and thank you for being part of this journey all these years.
I'm sure I was there on day one also, but I don't remember. Please check.
No, we will check, and we will then and now. We'll do a then and now. So, Samir, it's a bad-looking screen. And I was just looking at this Fino Bank, right? There's got this RBI license. Stock is down 14%. You think that as an example of how bad it is.
I had tweeted that on my birthday, the market went up a lot. And now we are talking about your birthday or your...
आपका birthday साल में 2 बार कर देंगे फिर अब. That is the effect.
So right now it looks like somebody is giving up on India in terms of selling. I guess I would call it indiscriminately, because there is nothing new that is happening that one you're showing is another example. But I'm saying in general, this looks more like dumping. Now many people say that some of the PMSs, which were exclusively or mostly into small cap stocks, are shutting because they have been doing badly for 1 or 2 years or 2-3 years. Not sure what the story is, but in general today doesn't look like a day from which you should draw a conclusion that somebody is seriously looking at it and has decided after when the year is about to end that this is the time to sell. It looks like somebody walking out of frustration, being upset with whatever, and maybe wanting to buy some AI-related stock related to OpenAI. I hope he does that instead.
Samir,
and not Google-related.
Google. And everybody, basically, that's the problem, right? Everybody seems to be on one side, which is selling. Promoters, sponsors, corporates, foreign investors. And it is the SIP money which is keeping things afloat for now.
But SIP is also ultimately the same public's money. So you can't say public this side. And all this thing about the promoter selling, we do see, not literally directly the same guy who's selling today coming to us, but broadly we can see from the inflows into both PMS and mutual fund that these are the promoters who have sold, maybe not today, but in the last X number of months, because they have set up family office or they've got some advisors now. So that money keeps coming back and forth. It's not so blatantly just one way in that sense. But I think it's more end of year, somebody wanting to give up, because this doesn't look like across the board everybody's decided today morning that when everything else is broadly okay. There's no extra incremental bad news that you have to hit literally every stock down 3-4%, 2-3% kind of thing. Therefore, I've seen this for too long. We have to give it a week or two, or if somebody thinks that they know something and we don't know, mostly that is not the case.
There is no hidden truth in that sense.
And particularly at a market level, you can say that for some stock that
Correct.
somebody has some information, but what do they have about the market?
Although Samir, one thing I'll tell you, this growing feeling that we are kind of stuck, that nothing is moving. RBI has cut, but beyond that.
So all the things that we could have done, we means the government or the system could have done in terms of other than just directly buying stocks, they have done. And therefore, it may take some time to feed through, but these things are not wasted. You can't say that, when they cut the rate that day, the market didn't go up, or the next 2 days, therefore what a waste. Now we need to do something more specifically for that. So if you have cut these 3, 4, 5 things, and in general, the market has corrected, and the rest of the world is not falling apart. I still can't imagine that somebody is using money from India to fund an investment in some other market. Because the Indian market in general has done well over time. And this year it has massively underperformed. So it's very unreasonable to think that somebody is selling a market which has underperformed by 28-30%, which means broadly, if they buy some moving stock in that other market, it is up more than 30% since their index is up 30%. So that means they are already giving a 50-60% or 40% spread in selling some Indian stock and buying some whatever they are doing with this money.
But although in that during the course of that underperformance, maybe the underperformance may have been caused by that India was used because it was very expensive. It was used as a funding market too. And this is a point which Neelkant was making a couple of weeks back, etc. Now, this SIP...
I don't think this funding business works. Just to give you the weight. So if you're a global fund manager, then India's weight in that will be plus minus, say, index weight, which might be less than 1%. Now, you think that because obviously they're not making it zero. Because if you see in aggregate, they have sold till, I think 1 or 2 days ago, $17 billion year to date, in which January alone was 10 billion. That means from February to today, they have sold $7 billion on their own aggregate AUM of, say, 800 billion. So they have sold 1%. So what I mean is, if somebody's weight is 75 basis point and 1%, and you suddenly feel that you have to buy some other market, it's highly unlikely that you do it, that, okay, I will reduce this 10 basis points here and buy Korea with it. You can fund it if you so desire with the balance 99% that you have. So don't call it a funding market. Somebody doesn't like it. They have lost and they are out kind of thing, but hardly that suddenly 1 day later, 10 days. Funding means that 3 months later, they'll come back with that logic. I think people who are selling and people who are buying will buy. Not all the time is it a movement from one market to another.
Samir, hi, afternoon. Is there a reason to buy Indian markets? We spoke about the underperformance versus rest of the emerging markets, 25, 30%, etc. But now looking ahead to 2026, do you think India
There are many, many reasons to buy. First reason is to look at how good our market has been since March of this year. Since March of this year, the Indian market is up maybe 15-20%. Mid-cap stocks are up maybe 25%. If you look at it from October 1, Indian market has outperformed the United States even till right now, even including the US dollar. Indian market in dollars. You can see it right now. You can show MSCI India from, say, September 30th, which means for the current quarter, and compare it to China, compare it to emerging market index, compare it to S&P 500, compare it to NASDAQ, India has outperformed. What I'm trying to say is that although on a yearly basis it looks bad, but if you look at it from, we are not saying look at first quarter, we are saying continuously from March 31st to today or March 15 to today, or you look at it from this quarter to date, which means it has changed a little bit. Now, if you look at it in absolute, from an Indian investor point of view, that, oh my God, what he could have done on December 31, 2024, he couldn't have done something much different by buying something else. Because unless you say an Indian investor would have sold India and bought Korea, he would have, we are talking about, buying equity or buying debt. So even till right now, I can see that 500 index is up 5%. So it's bad, but it's not that he's bleeding to death. And if he had Nifty, it is up some 9.9%. It has more or less, the sad part is that other markets are doing very well. It is not so much that a correction in Indian equities is in line with what corrections happen when we used to have corrections, which is the market falling 10-20%. It is depressing in that sense that the other guys are doing well, but it is not so wildly bad that people should feel, oh my God, why did we ever think of equities?
Hi, Samir. Good afternoon and good to see you. An interesting point, right? So quarter four hasn't been so bad. We keep talking about India underperforming, but actually for quarter four, we're pretty much in line or maybe better than a few markets.
Outperforming, yes.
So that's good. And the sector actually that's outperformed even more has been the tech index, which has been an underperformer for the first 9 months of the year. So India's outperforming within the basket. Actually, tech has done well. How are you all feeling about tech? If I'm not mistaken, from the low that we saw towards September end, I think the tech index, the Nifty IT index, is up close to around 17 to 18% or thereabouts. How are you all placed on Indian tech companies?
17% because it is still down 14-15% year to date. No, sorry, 11%. Maybe it is. But no, we don't like Indian IT sector because we are thinking of the fact that all these guys, for example, Anthropics is about to do an IPO at a $350 billion valuation. And if you look at the interviews that those guys are giving, and I guess the US world is accepting it, because if they are really serious about a $350 billion valuation, that many of these jobs of Indian IT guys are gone. We have met IT staffing companies, and all these staffing companies, you can call these, there are only 2 listed companies, and ask them what they think of the demand of people in the Indian IT sector. Actually, if you look at it, that if you look at the GCCs, and if you see the growth in GCCs, that alone shows you how much, even without AI, the GCCs are effectively doing things which in theory could have been done by the Indian IT companies. So even ignore the impact of AI. The fact that the global companies are confident enough to set up GCCs in India and have now so many people there shows that some demand which theoretically could have gone to the IT guys has come here. So we are not buying IT. I'm talking in general. I will buy IT only when I can see that either I evaluated or whatever this thing, the impact of AI. I think the impact of AI is very, very big.
Yeah, no, negative. Yeah.
And big. Because you can see the other side. You can't have it both ways, that the Anthropic kind of guys will give AI to enterprises, and they will have X revenue, and they will be valued at equal or more than nearly our entire big IT companies. But the IT companies will not be affected. But McKinsey will be affected, and McKinsey will fire their consultants, but IT guys will not fire. So as I've said, actually I've said it a year and a half ago, I do not believe the Indian IT companies' managements. I have never believed them for the last 25 years. I've invested in them, but I don't believe in them. Believe in them sense that they tell the truth, that they come openly and tell what is the situation. They only talk quarter to quarter. If some company has got an order from a company whose market cap is 350 million and they are getting orders worth billions of dollars, I just don't like or believe all this.
You know, Samir, the basic way AI, like for example, right, DeepSeek launched this new model, which they say is 25 times cheaper than ChatGPT, and it is as good as GPT. Now, very tough to say where value will finally settle at. All this is fundraising, etc. But adoption will happen. And the way many people are thinking about adoption is not from only IT services companies' perspective, but for this constant refrain that India does not have strong foundational AI, and maybe that is the reason why money is not come, etc. But AI will lead to basically productivity improvement, which is margins going up at the cost of labor, at the expense of labor.
Correct.
That is the basic kind of, at a broad level, right?
Because I get all my knowledge out of reading books. I read a book called The Engine That Moves Markets. And basically the logic there is that it is not easy to know who the winners are in anything. For example, suddenly from OpenAI and its cohort of partners from Oracle to SoftBank to even Microsoft, suddenly now the Google cohort and its partners are doing well. And suddenly OpenAI is under threat that Google is doing better. So what I'm saying is it's according to that book, and there are some 100 examples in that which are enough for me. And even we can see it ourselves that it is easier to know who the losers are than to know who the winners are.
Yeah.
And in any way we look at it, the losers are easy to see that in big picture sense. The Indian IT and particularly large Indian IT guys are the losers. And now which fellow will get a better application and which fellow will be able to use AI better and who will be able to have a better model, that is more difficult. As of now, in front of us, it has moved from OpenAI to Google. And on the other side, Anthropic says that I have got so many enterprise customers. So it can't be both. No, that's what I'm trying to say. And if they are, we will learn with time. But I can't buy a stock only on the basis that we don't know about the revenue, but the rupee has weakened by 4%. That is a very boring way to buy a stock.
Samir, once again, happy 26th birthday.
Thank you very much. And same to you guys. And even if you flip it.
No. Arey, you are, I'm not joking, you are one of the, liveliest.
I'm experienced, not old.
Correct. So absolutely. That I agree. And wise. Thank you very much, Samir, for joining us. And thank you for being with us on this special day. We'll take a quick commercial break here. We'll come back. With what's happening in the markets a little bit. Mitesh should be back with us. 20 minutes to go, less than 20 minutes to go for market close as well. I don't think there is any bounce afoot, maybe a little bit, right? So we're down about 200 points. The low was made at about, low actually was made at about 220 220. 920 was the low. And we're bounced about 60 points from.
A couple of those technical indicators moved, right, Prashant? Yeah. You had the PCR that moved to around 0.63 odd, and you had a lot of shorts in the system as well. So that was the near technical number, in fact, in terms of a bounce. And that's precisely what's happened as of now. And as I mentioned earlier, the bulls will like it if you end closer to the 20 DMA. It seems that could be the case, at least as of now. And the Nifty Bank's 20 DMA has got defended yet again. So keep an eye out on that. Nifty PCR towards the lower end of the range. The Nifty as well as the Nifty Bank look to be defending that 20 DMA as we speak. Slip into the break, come back, continue our focus on markets. We'll discuss a few stocks as well.
"26 years of CNBC TV18.
Welcome back. A bit of a recovery is afoot. The Nifty is now at 25,950. And in this sea of red, a few stocks stand out. Rolex rings, 11% up move, very large volumes. Latent View, 9.5%. Ashoka Biocon, where there is that order win. Physics Wala, Grow. These are some stocks which are still managing to be resilient.
One more, Rima. Dredging Corp, I think, something's going on there. Volumes are very, very large in comparison to the averages. So just running a screener. And Dredging Corp as well as another stock that's moved to the high point of the day. It's up more than 10%, spiking up, more than 50 lakh shares getting traded, bursting away in this sort of a market. But let's get in Mitesh Thakkar from Bonanza Portfolio, who joins us on the show. Hi, Mitesh. Good afternoon. Some kind of recovery from the lows. What do you think? Is it getting a little stretched on the downside? A near-term relief rally is something that you would look for?
Not really, Nigel. I think, it's just that we are in a range and we are close to the lower end of the range. So some short covering could have happened. And I think you were rightly mentioning the PCR also, is coming into play. It's getting close to those levels from where typically markets tend to bounce back. And therefore, my belief is that this consolidation might extend for the next few days. So in that sense, I think, nothing much on the index. On the stock side, though, I think I have one VTST and one STVT. On the STBT side is Lodha developers with a stop at about 1,082, 82.5, and I would look at a target of roughly around 1,055 to about 1,050 on the downside. And on the buying side, we've seen Indus Tower come off today after a good movement on Friday, but I think the support pivot is just right there. So try to buy it around 401 with a stop at about 398 and a target of 4067 can be looked at.
Thank you. You've been flagging off Indus Towers since morning. The stock is still down 3.5%. By the way, Starlink came out with its pricing for quite prohibitive. It's 8,600 is the pricing, and plus there will be some other costs associated with it. And analysts are pointing out that this is much more expensive than what the pricing is in other emerging markets like Bangladesh, Sri Lanka, etc. So I guess the takeaway is that there is no real threat to, say, a Bharti Airtel or a Vodafone Idea. But let's talk about Keynes Tech, because that stock continues to fall. Remember, brokerages had highlighted some governance concern, accounting issues. The management clarified. Upasana joins in to fill us in.
Well, certainly the stock continues to see a steep fall today as well, nearing its 52-week low. Now, mind you, last week Kotak had flagged off some serious concerns in terms of its balance sheet and cash flow issues, and even questioning the company's revenue growth rate, excluding its smart meter business. Now, in response to that, the company held an analyst call today morning, and here are a few of the important takeaways. Now, company says that there are no inconsistencies. Most of the implications are not valid that the Kotak has given, and the Kotak's entire report is based on one small omission in notes to account, which is a related party disclosure, which will be duly corrected now. In terms of working capital, which was another concern raised by the brokerage, it says that the working capital intensity is very typical to EMS players, and company is going to take various measures to correct it and improve it further. Smart meter business contribution to overall sales is trending downwards, and other business verticals are showing strong growth momentum. Company's other verticals such as industrials, automotives, railway are seeing a strong growth rate, which is above the overall growth rate of the company. And company has guided that the going forward reliance on company's smart meter business contribution will certainly come down. And in terms of promoter stake, the company has highlighted that they are not aware of any promoter selling its stake as of now. So overall, these were the fair details given by the company in its analyst call, and the stock certainly remains in focus today on the back of this.
Okay, all right, Upasana, thank you very much for that. We'll take a break. Gurmeet Chadha of Complete Circle Consultants on the other side. Stay tuned, coming up.
Putin's agenda for New Delhi. Parikshit.
Keep chasing the sunshine and go out and play.
Happy 26th birthday.
भी लगाएगी तू?
देखो है तो देखो.
Happy 26th birthday CNBC-TV18 from the crown.
लाइन दिखाते रहना, वो इन लोगों का बोर्ड दिखाना, ठीक है?
Listen, I wanna be there with you no matter where you go. Life is a table for two, and we're starting the show. I'm gonna spread my wings and fly so high up above the clouds. Simple.
Well, of course, we're celebrating 26 years here at CNBC-TV18, and would have been nice if the market looked a little better, I guess, on a day like today. But, well, it is what it is, right? And across the board, I mean, once again, there is a re-acceleration down. There was a bit of a bounce which we saw. We were, but it's gone south once again. So 245 points, 25,940 is where we're at. Once again, coming back to, we're about 45 points off the day's low, which was made at about 218 or so. Any thoughts, Mitesh? Let me ask you this Fino Bank. I don't know if you've ever looked at the stock, but it's a cash stock, a fair bit of trading history. Good news, stocks goes south, price action wise. So what do you do with something like this?
So I don't track it regularly, Prashant, but yeah, I think today it just come in the scanner of stocks with a good amount of decline. See, the 200-day average, which is where the last time the stock had bounced back, was around this 264, 265 levels. And I think, it might hit those levels again. Right now it's at 265. But in case it breaks below this 265 odd zone, then I think it's heading towards 248, 245 as a minimum, and the worst case scenario, even possibly 230.
Okay, all right. By the way, just pull up a few stocks actually. We're seeing a few stocks that are moving higher, and they're moving well. In a market that only 470 stocks that are advancing. Latent view, I think Remat spotted that earlier. That one has spiked up big time. You pull up Shriram Pistons as well. That's the other one. I think Sunil Singhania, Abacus, they hold that stock, and they've been quite bullish from very early levels itself. That as well is up closer to around 10%. So big move is what we're seeing on that one. Dredging is another stock that's now up close to around 17%. We were spotting that as well. Pull up Latent View as well. So a big uptake is what we're seeing on that particular name. I think Home First, Prashant already viewed. And RPG Life, another stock. So there are select stocks actually that are doing pretty well in an otherwise dull-looking market. Yeah, 10%. But I think that, from the word go itself was up because of that buyback news that came at around, 9 a.m. or thereabouts. So that one has continued to hold on to gain. So it's a tricky market. You have a lot of selling pressure on a whole host of names. The breadth of the market is negative as well. But a few of these names, they're brightening up the day a little bit. That said, let's wind down the markets today. We go on with a cut of around 250 points. The Nifty Bank as well goes on with a cut of around 620 points or thereabouts. The positive news is at least the Nifty Bank defended the 20 DMA, while the Nifty wasn't so lucky. That, in fact, ended with, below that 20 DMA. Stocks that lost out today, BEL came for some profit taking, down 5%. Indigo Aviation, that was a casualty, down close to around 8%. And JSW Steel, after doing well last week, well, that came in for profit taking. That as well down close to around 4%. And they were selling across the board. Eternal was down, Geo Financial was down, Shriram Finance, all of them down 2.5% or thereabouts. The lone gainer on the Nifty, actually, with a gain of more than 1%, was Tech Mahindra, and add to the list, Wipro as well. From the broader markets, few stocks that did well. You had Dredging that was up. You had Rolex Rings that was up more than 10%. Latent View as well up close to around 11%. And Matrimony up close to around 10%. But there were very, very few winners from the broader markets, with only 450 stocks advancing, while 2,500 stocks were declining.
For Interglobe Aviation, the fall is the most since February of 2022, and the market cap is now below 2 lakh crore. It's the 7th consecutive day of decline for Interglobe Aviation. Fino Payments Bank, 12.5% down. You had softness coming through in PG Electroplast. Keynes took a big knock, and even Biocon. The street, even after the announcement of the company making Biocon Biologics a wholly owned subsidiary for $5.5 billion, Biocon ended down nearly about 3%. We wrap up the day?
We wrap up the day, and I think many people will be saying, thank God, right? Because it just looked very, very bad. 25,934 is the final close. I mean, I think the adjusted close perhaps in a couple of minutes from now, but otherwise it's looking pretty bad to kick off this week. Well, it's a wrap on this edition of Closing Bell. Thank you very much for staying with us here on this show, but programming will continue on the other side in just a bit from now.
"26 years of CNBC TV 18.